Are crude oil prices about to take another plunge lower? Hello traders, this is Fawad Razak, Southern Market Analyst with City Index. Let's get into it. Owing to the existing concerns about excessive supply and weakening demand, crude oil prices were already weaker on a multi-week losing run, as you can see on this weekly WTI chart, before the news of a potential deal between Ukraine and Russia emerged. So the path of least resistance on crude oil remains to the downside, and it could break to a new yearly low given how price action is shaping. To give you an idea, a few weeks ago we saw a major rally from this area of support on the WTI chart of around $56. But following such a big move, you'd expect to see some follow through to the upside. However, resistance held right where the sellers needed to step in, really at around 62-ish. And from there, oil has been bleeding lower ever since. And following last week's bearish candle, this is an indication that the market is quite heavy and it potentially wants to take out liquidity resting below these lows. The most important low coming in at just below the $55 level, marking the low from April. That level has been tested, or we've got close enough to that level on a couple of occasions, but so far it hasn't been taken out decisively. Brent crude oil bounced from where it needed to yesterday, from around the $61 level, which is where the crude oil contract had previously rallied away from. It tested this level and it bounced, but it hasn't gone anywhere significantly away from that level, meaning that the downside pressures remain, and we could yet see a breakdown below the recent low of around $60. If it goes below that, why stop there? Why not take out the April low, for example, at 58.25 next? And then why stop there? So, oil prices remain exposed for a potential drop in the coming days and weeks, unless something fundamentally changes to suggest that the excess supply is not going to happen in 2026. Whether that's because of an improvement in data or the OPEC reversing its strategy. But for the time being, the downside pressure remains, and the chart is telling us that the path of least resistance is to the upside. But as traders, of course, we'll have to be flexible and change our minds if price action tells us otherwise. And one factor that could potentially support prices is profit taking, really, from the sellers who have presumably been pricing in all the bearish news that's out there at the moment, or at least most of it. So it wouldn't take too much for oil prices to spike higher. Potential flare up in the Middle East could be a trigger, but those risks look limited for the time being. And for all of those reasons, I think the downside remains the more likely path for crude oil prices. Don't forget to like and subscribe, and for more market updates, head over to cityindex.com. I'll see you in the next video. Take care.